If you're struggling, if you're struggling to make money in the market, then you should definitely consider using this trading strategy. Now, this trading strategy is called the ICT Silver Bullet trading strategy. This strategy is a strategy that ICT has taught himself and that he trades. So if you do want to find quite a mechanical strategy, now what I mean by mechanical is that you just follow the steps of the strategy, and it is a very, very easy strategy to follow. You can get multiple trades a day using this strategy, and the win rate is quite high. So the first steps that you want to follow are there are time frames in the day where you can trade this ICT Silver Bullet trading strategy. The first one is from 9:50 to 11 a.m. Now, a lot of you are probably wondering, oh, I've been taught it's from 10 to 11. Yes, but there's actually a macro that is from 9:50 till 10 past 10. So that joins on with the Silver Bullet macro. So you can trade from 9:50 to 11 a.m. That is the morning New York session. And then there is a PM session, which is from 2 p.m. till 3 p.m. So these are the times that you can trade the Silver Bullet. You can't take this trading strategy any other time of the day, even if all the steps that I'm going to teach you all align. It needs to be in this 9:50 till 9:50 till 11 a.m. or 2 p.m. till 3 p.m. And yeah, these are just the macros you want to time it, and the macros that this strategy works the best. So if you take a trade at 12 a.m. Or 11:50 and the strategy doesn't work and you're not seeing the results, it is simply because you're just not trading the strategy in these timeframes that I've taught you now. Okay, so that is the first thing that you want to make sure. Now, another thing is the next step is you're going to have to target opposing liquidity. Now, what I mean by this is, let's say I'm here before we hit 2 p.m. our macro time. As you can see right now, our market is trending downwards. Okay, we're in a downtrend. We're making lower lows, higher lows, lower lows, higher lows, lower lows. So you can just clearly see that right here we are going down and down and down and down and down, which means that our ICT Silver Bullet trade is going to be a long. We're going to look for buys because we have just been trending down. So what I mean by target opposing liquidity is, as you can see, we have sell side liquidity here. We have buy side liquidity here. So as we have just kept taking sell side and sell side, our target would be buy side liquidity, which would be right here. So if you're unfamiliar with how to find your liquidities, I have multiple videos that go over liquidity by itself. It's actually one of my most popular videos on this channel. But all liquidity is just where stops rest in the market. So buy side liquidity just means it is where there are buy stops resting in the market and people have their stop losses at this point here. And then that is the same for up here. So this would also be buy side liquidity. So in this example, we are looking for longs only, just because, as you can see, we've already been trending downwards. So our only target is upwards. Another reason this is quite good is if you use premium and discount. If you're unfamiliar with premium and discount, all you want to do is get your Fibonacci tool, mark out a swing high and a swing low, find 50% of the range, then anything in at the discount. If you find things in the discount, then you want to be looking for buys. If you find things in the premium, you want to be looking for sells. So if price is above this 50% Fibonacci, we are going to look for sells. If price is below this 50% Fibonacci, we're going to look for buys. Now, obviously, you don't just do that by itself. You need to line it up with another strategy. So here, for example, I'm lining up the Fibonacci with the Silver Bullet trade. So it just all lines up. We are at the bottom of price action. So our main targets are going to be buy side liquidity. Okay, then the next thing that you want to happen is you want to wait for displacement or big candles, big blue or big red candles. So you just want to wait for a move to happen, and normally this is the move that creates the fair value gaps. Okay, so the fair value gaps are the next strategy. Now these normally go hand in hand, the displacement and the fair value gaps. Once you have displacement, it almost normally creates the fair value gap that you are going to enter off. So the fair value gap is where you're going to find your entries. Okay, so right now let me show you guys an example. So we're looking at price action right now. This blue line that I've just drawn on is where it turns 2 p.m. Okay, so we can take this trade anywhere after 2 p.m. So 2 p.m. to 3 p.m. is where we can take this trade. So if we play the price action, as you can see, we get some displacement to the upside. Now, as well as displacement, what do we also get? We get fair value gaps. As well as a fair value gap, actually, we do inverse this fair value gap right here. So if you do actually want to learn my other strategy where I trade with inverse fair value gaps, I have a win rate of over 80%. I trade it live every day in my Discord, and I also have a full training course on that strategy. Then you can learn that. The links are all in the description. But yeah, as you can see, we've had these displacement candles. Now, what does this displacement candle create? It creates a fair value gap. Now, fair value gaps are just the best ICT PD array. As a lot of you guys know, I literally mainly only use fair value gaps and liquidity to trade. So this, honestly, the silver bullet strategy is one of the best, most reliable strategies out there. So yeah, as you can see, we have this displacement. We have created a fair value gap. So now where do we enter and exit and put our stop loss? So our entry to this fair value gap would be at the top of the fair value gap. Now, I personally like to put my stop loss at the swing lows, and but I know some people like to have a more of aggressive stop loss, so they have better risk to reward. I also know some people that like to enter as soon as a fair value gap is created, as well as entering the trade when the fair value gap has not been tapped into yet. So me personally, it just depends on the scenario. For this scenario, I would wait for this fair value gap to get tapped into, just because it has a high chance of getting tapped into because we are in such a downtrend. But as I said, because we're in that 2 p.m. to 3 p.m. macro, there is a high chance that we now get a reversal. So my first target would be this buy side liquidity right here. As well as this being my first and my main target, I would put my stop loss to break even as soon as this point is broken in the market. Okay, so let's play at the price action. As you can see, we come down, fill this fair value gap. We are respecting this fair value gap nicely, and we get a nice move up, taking this first take profit. So what I would do here is I would take most of my profits here. I would then move my stop loss to break even like that, and now I would just target higher up, and I would target the rest of buy side liquidity. I'm actually unsure if this hits take profit or not, but yeah, as you can see, it doesn't quite hit take profit, I don't think, but as you can see, we are just reversing as soon. Oh, we do actually hit take profits, which is very nice. So yeah, that would have been a big win, big winning trade. And as you can see, how important this macro is. We are trending down, trending down, trending down. We come into this 2 p.m. macro where the ICT silver bullet takes place. And what happens as soon as we come into this macro? We create a fair value gap and we react perfectly off the first fair value gap. It looks like we fill 50% of that fair value gap, which we do. The more that you use fair value gap, the more that you'll pick up on stuff like this. If you go to a fair value gap, mark out 50% of the fair value gap using the Fibonacci again. That 50% mark loves to get filled, and our body close around there, or normally just wicks 50% of the fair value gap. That seems to happen a lot. But yeah, this is the full ICT silver bullet strategy. As I said, I trade for free in my Discord every day trading this strategy. I also have a course teaching my 8% win rate trading strategy. So if you do want to learn these strategies, then make sure you click those links in the description. Thanks for watching.